Hello, this is Mike Foreman with Game Plan Retirement with another episode of Let's Ask Mike, where I try to make the world a better place by sharing good questions that have come in recently that I think might be helpful to more people. And one question that's come in quite a bit recently is whether or not I can make a IRA contribution, even if I participate or have available an employer plan at work. And so I thought I would share some of the information that I came up with and hope that might be helpful to you or yours. So first off, the question again is, can I contribute to a traditional or Roth IRA if I'm covered by a retirement plan at work? The answer to that is yes, with some caveats. You can contribute to either, including whether or not your company offers a SEP, simple 401k, 403b, or any sort of thing like that. I'm going to talk about some of the limitations on whether or not you can either deduct or make a Roth contribution, but the mere fact that your company has a plan available to you does not necessarily preclude you from doing that. So let's talk about what the contribution limits are in the first place. So for 2023, which is the year most people are asking me about right now, you can make a Roth or traditional contribution or a combination, any combination up to $6,500 unless you're over age 50, in which case you can go up to $7,500 between the two sources. Okay. So now we're going to talk about whether or not you can deduct it. If you don't have a plan at work, then you can fully deduct it if you make a pre-tax or tax deductible traditional IRA. Roth IRAs aren't tax deductible in the first place, but there are limits based on income on whether or not you can make a Roth contribution. So let's talk about how, again, just restating what I just said, that no, if you don't have a retirement plan at work, you can make a traditional IRA contribution and fully deduct it. If you do have a retirement plan at work or your spouse does, then there are some income limits on whether or not you can deduct it. We'll talk about those in a minute. I'm not an accountant, so you'll want to talk to either your accountant or someone of that sort. But I work with the investments and how to handle and set up IRAs. Be happy to help you with that. But you'll want an accountant to verify this. All this information, by the way, is coming from the IRS website, so you can also take a look at it for yourself. And again, as I'd mentioned, Roth IRAs aren't deductible, so they're not a part of this deductibility conversation. So the deduction limits are based on your adjusted gross income if you also have a plan at work. And so the way that works is if you're single and you have a plan at work, but you make less than $73,000 per year, or your adjusted gross income is less than that for this year, for 2023, then you can make a full IRA contribution of up to $6,500 unless you're over age 50, in which case you can go up to $7,500 and you can deduct all of that from your income. If you make between $73,000 and $83,000, then part of your contribution would be deductible. If you make more than $83,000, none of it would be deductible, although you can still make an after-tax contribution to an IRA. You don't see that too often, but there are some strategies where that seems to make a lot of sense. If you want to talk about that, give me a call and we'll talk about your situation specifically. If you're married and you file jointly and you make less than $116,000 on your adjusted gross income, you can fully deduct the IRA. If you make between, as a couple, $116,000 and $136,000, it's partial. And if you make over $136,000, it is not deductible. Now, the question with Roth IRAs, which are one of the most pertinent things to talk about these days because of the tax benefits at retirement, which is basically no tax if you do it right. And so they put limits on how much you can contribute outright. So if you make more as a couple, married filing jointly, if you make more than $218,000, or if you make less than $218,000, then you can make a full Roth IRA contribution up to those limits that we talked about a moment ago. If you make between $218,000 and $228,000, then there's a reduced amount. We'll talk about that a little bit more in detail in a minute. And if you make more than $228,000, you cannot make a Roth IRA contribution. However, if your company offers Roth contributions in your 401k or 403b, these limits don't apply. So I have a lot of clients that make over these amounts that participate in retirement plans that I work with who are maxing out their contributions into Roth and anticipate quite a bit of tax-free income at retirement. So if you're in that scenario, you want to get into that in more detail, please reach out to me and we'll talk about it. Also, the limits are, of course, lower for an individual. They start at 138,000 for in an individual. If you make below that, you can make a Roth contribution up to the limit. If you make between 138 and 153,000, there's a reduction. And if you make over 153,000 as a single, then you can't make the Roth IRA contribution. Now, sometimes we get a little bit more granular and start talking about those partial amounts that you can contribute. So this is right on the IRS website. It's a little bit complicated, and you'd want your accountant to help you with this. But nonetheless, since we're talking about the topic, we may as well get into it. So this is if you make between that 218,000 and 228,000. It'd be different if you were single. This assumes married filing jointly. So you take your adjusted gross income, you subtract that amount, the level where you get to that minimum, you divide it by $10,000 if you're married and filing jointly, or $15,000 if you're single, and then you would multiply the maximum contribution limit, so either the 6,500 or the 7,500, by 3, and then you would subtract that result from the maximum contribution limit before this reduction. The result is that's the limit you can put in. It almost feels like one of those math story problems from the olden days. So hopefully that is somewhat helpful. If you'd like to talk about IRAs, or if you have existing IRAs and you'd like to talk about how those are managed, or just talk about retirement planning in general, we appreciate the opportunity to be of service here at Game Plan Retirement, and look forward to all these great questions that keep coming in. So thanks very much and have a good day. Bye-bye.